Hello and welcome to this February edition of Property News. Today I'm going to give you an update on the UK economy, talk about what's happening right now in the property market and give you some investor insights for the next few months. So my name's Tony Law from Your First Four Houses, and my channel's all about helping you replace a job-based income with just a handful of investment properties so that you can give up the day job if you wish and go and do something more interesting with your life. If this is your first time here, be sure to subscribe to the channel and click that bell notification icon so that you don't miss out on any of the free content that I give you each and every week. So let's start things off with the economy. And the very first thing that I want to say here, because I haven't been able to say anything good for months in the past, is that with the rollout of the vaccine program, policymakers are now expecting a bit of a rebound in the economy as we move beyond spring. This is despite a predicted shrink of 4.2% for the first 3 months of the year. This rebound is driven by consumer confidence and perhaps a kind of gut-like determination to get back to some sense of normality. However, despite this, tragically in January, the UK surpassed 100,000 people who had died with COVID, and at the time of filming that number currently stands at 112,000. However, the number of infections continues to fall, and we are starting to see a genuine drop in hospital admissions. Boris Johnson has stated that he hopes a gradual and phased relaxation of the current lockdown is possible in early March, and easing restrictions could start with schools reopening on the 8th of March, at which point 15 million people in the top 4 vulnerable groups will have had their vaccination jabs and therefore have full protection. He is making public his plans for how the lockdown will be eased on the 22nd of February. The number of people out of work in the UK has continued to rise, with those aged 25 to 34 facing the biggest risk of losing their jobs. Unemployment now stands at 5%, up from 4.9%, as COVID continues to impact the jobs market. Sadly, all Debenhams shops are to close, with the loss of a further 12,000 jobs following a buyout by Boohoo, who have said that they will not be taking on any of the firm's 118 high street shops. Last week, it was announced that in 2020, UK car production slumped to its lowest level since 1984, with both production and exports falling by 30%. But despite this, the manufacture of electric and hybrid vehicles continues to grow, and last year accounted for 19% of all car sales. By the way, Liana and I are actually considering getting an electric car, so if anyone's got any recommendations, please comment below. It was also announced last week that the UK is applying to join the free trade area with 11 Asia and Pacific nations, which will obviously boost UK exports to that part of the world. This trade agreement covers a market of around 500 million people, but they are obviously harder to reach than our neighbouring markets in Europe. Early in January, the Chancellor announced new business grants for the retail, hospitality and leisure sectors to help keep them afloat until the spring. The grants, which are worth up to £9,000 per property and do not need to be paid back, were welcomed by business groups as a good start, but they warned that the money wouldn't be enough to save many smaller firms from collapse. This grant is in addition to business rates relief and the furlough scheme, which has been extended, as I'm sure you know, until the end of April. And yesterday, the Chancellor announced small firms will be given more time to repay state-backed loans taken out to help during the coronavirus lockdown. The changes include giving companies an option to extend the length of the loan from 6 to 10 years under a kind of pay-as-you-grow type initiative. By the way, if you're finding this video in any way helpful, it would just be awesome if you could click on that link down there. It really helps me if that's okay. So moving on to February's property news. Well, the housing market activity for the first few weeks of January every year often sets the tone for the coming year. But of course, this year is entirely different. The ending of the stamp duty holiday in March and of course the pandemic are having a huge impact on all of the numbers. But there are 3 observations that I can still make. Firstly, new sellers are definitely now pricing more competitively. in the hope of enticing buyers before the end of the stamp duty holiday. In fact, the average price of property coming to the market in January actually fell by 0.9%. However, this leads me on to my second observation. And it is that new buyers are now highly unlikely to beat the deadline, as the average time to complete a purchase is now 126 days from the time an offer is accepted until legal completion. That's 4 months. And by the way, it's just as unlikely that cash buyers will be able to complete by the end of March, because solicitors and surveyors have very little capacity to take on any new business. Which brings me on to my third observation. There is a mammoth 613,000 properties that are sold subject to contract and still awaiting completion in the UK. Projections suggest that 100,000 of these will miss the 31st of March stamp duty cutoff. With that said, I'm still willing to bet a tenner they'll extend the cut-off date, but that is just my best guess. And I've been saying it for months. Low deposit mortgages are making a strong return to the market. In September last year, I reported that there were only 44 mortgage products available for those with a 10% deposit, compared to 197 products available today. There was also a rise in the number of 85% loan-to-value mortgages, although to be fair, there was always a far greater choice at this level. Many holidaymakers are opting for UK destinations this summer, which is leading to a huge demand for all forms of UK-based accommodation. This will be welcome news for those with holiday lets or serviced accommodation, although I appreciate any boost in income now will do little to offset your losses from last year. And lastly, on property. On the 7th of January, the Housing Secretary announced a huge leasehold housing reform, meaning that leaseholders will be given the right to extend their lease by 990 years. I personally have some leasehold flats. We'll be looking into this more over the coming months, and we'll probably do an updated video for you. However, for more information, I will leave a link to an excellent article and interview by Property Tribes in the comments section below. And lastly, let me give you a few quick investor insights for the month. But before I dive in, what follows are just my personal views, and I may well be wrong. You've always got to do your own due diligence, form your own opinions, especially when it comes to any deals that you may be considering. First of all, are we being artificially propped up at the moment? This is kind of more of a question for you, really. I think we are. We've obviously got the stamp duty holiday, which is allegedly going to be ending on the 31st of March. That's doing a huge amount to kind of buoy up the property market. We've also got a number of people, millions of people who are obviously currently furloughed. And so therefore, I don't like to phrase it like this, but they're perhaps not feeling the pain, shall we say. And so obviously that's doing a lot to actually prop things up. Plus, there's lots of government support for businesses, which again, I'm sure you're fully aware of. Property taxes are likely to increase in the next budget, which is, as I'm sure you're aware, coming out on the 3rd of March. Obviously, the debt that we have now is insane. They have to start to recoup it somewhere. And I kind of think targeted taxes, sadly pointed at the property industry, are probably very, very likely. I think the market may die in the second quarter of this year, assuming that the stamp duty holiday does indeed come to an end on the 31st of March. You imagine how many sellers have put their property on the market, expecting to nail down a buyer by the end of the 31st of March, and suddenly everybody just disappears. I honestly think that may mean a fantastic opportunity for you if you can form creative solutions for those potential sellers who have found that all of the buyers have just simply gone and disappeared. Don't bother trying to beat the stamp duty deadline right now. So if you're looking at any opportunities and you're thinking to yourself, I could pull this over the line before the 31st of March, I personally would just give up on that whole concept. You're probably, or almost certainly, not going to be able to achieve that. When furlough ends, people will lose their jobs. So many employers have kind of kept people on the books. Again, I don't like talking about this, but it's a fact. So many employers have got people on the books that when they have to start putting their hands in their pockets and paying for those people to return to the job place, well, do you know what? After 2020, they probably have reshaped their business. Maybe there are some people that want to come back and some people not. And I'm going to be honest, I think it's unlikely that we're going to see an extension to the furlough. And so I think what you need to be doing now is to put plans in place. If you're on furlough and there is a bit of a question mark, you need to put plans in place right now to make sure that you are securing your future and looking after your future moving into 2021 and beyond. And kind of banking on going back to that job, well, I think that's actually a mistake. You need to think in a different way, I would respectfully suggest. My next one is, please look out for my brand new webinar that's going to be coming out over the next couple of weeks. I've put an immense amount of time and effort into this webinar. I'm not going to be doing lots of different ones each week. This is a really focused one. And you know I love my graphics, so it's going to be good. Watch out for it. It's coming out in the next couple of weeks. And lastly, can I help you? I want to help and support people in 2021 as we move forwards. I offer some really good coaching options, and I've also got my online property masterclass program. And so if you are considering moving into property, expanding your portfolio, or quite frankly, just getting started in property, which I think you should be doing in 2021, reach out to me. I'll put some links in the description box below because I know I can help you.